Hello everyone, welcome back to my channel. So this video marks the end of the week number 67 in this Road to 100k Realized Return Challenge. And this has been a tough week for the markets and including for us. There was a tiny detail of a situation that occurred on Monday at the end of the trading day that basically determined how the rest of our week simply played out. And even though, given the way the markets behaved, it would still have made some difference, but not as much. And yeah, we never know what actually could have happened. And so, with 2020 hindsight, it's always easy to see what went wrong. But yeah, basically, this is how the things have played out. But let's get into it. So basically, as I mentioned in the previous video, the week started by selling again some calls on the queues, and this week was all about the queues for us. And at the time, as I explained, and this is the graph of the queues for this week. The market opened with a very large gap here, and at the time it was opened. It opened at around 636 or very close to 636, and we sold a 636 call. And then, as I mentioned in the previous video, um, because the market started to come down and we wanted to get rid of the shares, we decided to buy back the 636 calls and sell again some 633 calls. Now, unfortunately, the way things played out, the market was hovering around the 632 plus, a little bit over that. And let's just put here the daily graph so that we can make some zoom out of this. Yes, so this is, let's see, so November 4th. Yes, so this is where we were. And apparently it was here around 632, 630, 32, 31, 32. And at the time, the way the market ended, it would have been good enough for us to buy back the 633s and sell 632 calls right at the end of the session to have our shares assigned, and basically we get rid of the shares. Now, for some reason, which I don't know what happened, and looking here at the option chain, of course, this option chain is not the one that matters or the one that was relevant at the time. But what transpired was that this bid-ask spread, and keep in mind this is, for example, what is happening here at the end of a session on Friday. This bid-ask spread was extremely large, and at the time I recall that I would have to buy back the 633 at a higher price than the one I sold, even though the selling price was much smaller. So the difference was around 10 to 15 cents each. So for you to have an idea of how wide the bid-ask spread was, and that tells me that a lot of people were basically placing buy orders, or they wanted to buy the shares, so they were betting on the market recovering, uh, and or basically being assigned some shares in the post market. But it never happened, and at the time I felt, all right, let's let let's just let's just let the 633 calls expire worthless, We're not gonna take a small loss to sell again the 632s and sell the shares. Uh, and tomorrow, meaning Tuesday, it's another day, and let's see what happens. And of course, because many times as before, the market had upward gaps for the next day, and this was my hope. Unfortunately, as it turned out, it was anything but. And here, this is basically what happened on Tuesday morning. The market had this huge gap down, and apparently this was because some, even though at this time some companies, tech companies, presented the results. The most important of those was Palantir, which is a AI related company who has a lot of contracts with the U.S. government. And even though this company reported earnings and guidance, earnings that exceeded expectations and a very strong earnings guidance for the upcoming quarters, this was apparently not enough to to avoid the fear that perhaps AI companies are extremely overvalued, and so they may be due for some devaluations, some pullbacks. And in the case of Palantir, it was widely reported in the press that it was trading at 200 times its earnings, and other AI companies are trading at 80, 90, even 100 times earnings, which is indeed a very high valuation. And it's a sign, of course, they are extremely overvalued at this point, and they must come up with earnings which have a very strong growth to compensate for that very rich valuations. And so at this time, we were still having the shares. We started to accumulate a large unrealized loss on the shares. And at this point, it was no longer possible to sell zero DTE calls on our shares. And so we basically had to go for calls that, even though here we managed to sell some, let's see, yeah, on Tuesday we were still able to sell a 630 call for the same day as 0 DTE, but for from Wednesday onwards we were forced to sell in this case 5-day calls, and it is culminated in not being able to do any trades on Thursday, and on Friday we made a trade for a call for calls on the queues expiring the following Friday, so a whole week worth of maturity. And because as these fears continue to rock the markets completely continue to come down. And even though there was a slight recovery here on Wednesday, because apparently, and I believe this was the main catalyst, the private jobs report on Wednesday, which is still being reported, still came good. It was the largest increase in jobs in the private sector over the past 3 months. So this was a good development. This may lead to some recovery in the market, but yeah, the tide quickly turned again to the negative. Also, as you can see, the jobless claims, we have no news on that because of the market or of the government shutdown. Also, the consumer sentiment came below expectations on Friday. This also weigh in on the expectations of the investors, and the market continued their downward trend, even though this pullback, this downward trend was probably because of that consumer confidence being on the lower side, but then the market started to recuperate on to recover on Friday. But still, we are a long way away from the 630 cost bases that we have, and so we're going to have to continue wait until these calls that we sold this Friday and will expire next Friday to become almost worthless, so that we can roll over the calls, or if the price comes back, yeah, we basically get rid of the shares. But if the situation on Monday did not happen and we were able to sell the 632 calls, most likely the next day we would have gone to sell some options on the IWM, and some puts rather on IWM, and even though we would still be assigned for sure at some point here, uh, probably we would not be as far away from the price or from the cost basis as we are with the Qs. With the Qs, the downward or the losses in value were much higher, for much larger, and so that means that we will be forced to wait a little bit longer, probably, to sell our 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 shares before losing before recovering, and so this is basically what has transpired over the week. Now, also, some other factors that may have been also way down on this sentiment was because the government shutdown at this moment reached a record days. It went past the 40-day milestone, and this also may have woken up investors that probably this is becoming a problem because we are riding a ship without any instruments, or riding a plane without any instruments, so we don't know where we are going in terms of the economy. Still, the investors are giving a 2 out of 3 chance roughly of another rate cut in the December meeting. So here is the probabilities, and they are assigning a 1 in 3 probability that it will remain the same, but probably we'll have also to wait for more data on the inflation side if it becomes available, but that will be depending on whether the government shutdowns, the government resumes normal service. Now, for next week, but before we talk about next week, keep in mind that earnings have been coming thick and fast, and most companies have been beating the expectations of analysts, and still there is some fortitude. There are still some good momentum in the company's earnings overall, in the universe, in the corporate universe, but still, of course, due to this very rich valuations in the tech sector, everything is coming down, is being dragged down, because of that, just because the sentiment has become largely negative. In terms of the other trades that we have done, the XLF, we were not able to do much on the calls for this week, so we still, because I was already figuring out that probably we won't be able to sell anything in terms of calls for this week. We managed to sell one at a very low price, but because we then bought it back, we just made a 4-cent profit on this, which is meaningless, of course. And at the moment we still have these positions open, so we cannot account. We already have the premiums for these, but of course we're not going to account for that because the positions are not yet closed. We managed to do still about 600. Yeah, because this is the result is off screen, so I will put it here just to see how much it is. So Yes, this is it. So $1,605, a little bit more than that. So it's still, yeah, it was still a pretty good week given the situation, but of course the bulk of it was mostly because of this zero DT option that we sold, right? And of course this one was a 5 week option that we managed to sell early, to buy back early, because the market continued to come down and most of the profit was already available for us to reap, to collect. And so yeah, this is pretty much it. And also, another thing that I want to talk about is probably for next week, assuming this call will become almost worthless and the market won't recover this won't recover that quickly. Probably, and this is a possibility, what we are going to do next is not to sell at 630, which is our cost basis. Keep that in mind. But because at this moment we already managed to bring down our cost basis by quite some margin, and if you see here, we were able to, assuming we are letting this expire, or even if we bought back at what, 3 cents or something like that, we have already, with the premiums we received, we will be able to sell a 626 call and be assigned and still have a very small profit. All right. So what probably we are going to do next is, instead of selling 630 calls, which would be something like this, we will probably go a little bit further up in the option chain or further down, um, and sell 628, 627, but not for the benefit of receiving a higher premium, but for the benefit of having shorter maturities. Because, for example, if we collect for this one 86 cents on a share, all right, we may be able, for example, to reduce our maturity for example 2 days and get a comparable premium. Apparently we cannot, but if we go to this one with 1 day less, let's see what shows up. Yeah, for example, we can sell for basically almost the same premium, one of these at 627. So we still get a small profit with the premiums, even though we take a capital loss, but we still manage to get 1 day less in the maturity. And the purpose of this is basically to try to minimize the extension of the calls, to get some more return, not in terms of higher premiums, but in terms of the being able to roll over the options faster. But for this example, for just 1 day, it won't make a difference. So I would not do this move for just 1 day. But if it is, the difference becomes 2 or 3 days, probably it will be relevant. But for the time being, if it stays like this, we continue to sell the 630 and still use a 1 week option, for example. Now, having said that, for next week, uh, I believe we're gonna have still some earnings as well, and yeah, we will continue to do the same thing as we have done. Of course, now with this situation, we'll have to wait until the market recovers. These XLF puts and calls, yeah, whatever happens, the result, we are happy, because if we are assigned at 51, we bring our cost basis below 52.50, and we still are able to sell 52.50 calls, get rid of the shares, and still have a very small capital gain. But for now, in terms of the queues, which is the most important thing, we're just gonna have to wait. And yeah, hopefully the market will recover quickly, or even if it takes a little bit longer, we can be safe and assured that it will eventually come back, because it has always been like this, and there's no reason for this time to be any different. And let's hope that the closing hours of the Friday trading day are a good omen for next week. Yeah, I believe this is all. Yeah, feel free to leave your comments in the comment section down below. And I'm also available on LinkedIn in case you need me to ask me any questions. And of course, feel free to like the video and subscribe to the channel. And we will start the week number 68 either on Monday night or on Tuesday morning with another video. And yeah, I'll see you there.